Welcome back to 7-Minute Options. Let's take a look at the portfolio again. As you can see, it's out of whack again. We balanced this on Friday. Here we are on Tuesday after the Memorial Day weekend, and we went from 2 delta to 43 positive deltas. Again, completely out of whack. What happened? So I opened up Taste of Work this morning, and I noticed that my IPOE has been renamed to SoFi. So I guess the merger is final and it's complete, which is great news. The stock, the ticker symbol changed, but the price changed also. It went way up. So now this highly one-directional move is highly positive. But because SoFi, I guess the historical price data of IPOE wasn't brought in. So if I look at the chart for SoFi, what we see is that there's really only one bar, right? So we got this one bar here. There's absolutely no history. And because there's no history, like the history of IPOE wasn't brought in, therefore there's no math available to calculate the beta. So right now, because there isn't sufficient data to calculate a correlation between SoFi and SPY, it's only existed for one day, therefore this position is effectively ignored from the overall calculation, right? This can be easily avoided if I only stick to well-known, well-established stocks that have been on the market for at least a year or more. SoFi is not one of them. So that's why this will very much impact my profits and losses, but the overall impact of this is not reflected in the data, so in the delta, in the portfolio delta. So I guess now I got to look at it again and say, okay, what can I do? I can either take off a very positive position, like right now I have 3 highly directional bullish positions in Square that altogether have 23 deltas. I could take those off, but I don't want to because I do have a bullish stance on Square in the medium to long term. I'm going to keep those. I could open up more negative positions, and I think it's probably what I will most likely do. Interestingly enough, JPM, this is the iron condor that we looked at on Friday. Right now, JPM has breached 166. So now if we look at it, where's JPM? Come on, JPM. There we go. You can see it has now breached our position. So where this was highly negative on Friday, as it was just under our short strike, it is now even more highly negative. So this is actually helping pull our delta, portfolio delta, back towards zero, which is why I actually should be closing this. So if I look at it right now, if I would have a negative portfolio delta, I would close it out, right? Because closing JPM would make sense. There are only 17 days left to expiration. But I actually want to keep it on because if there's a bit of a down move in the market of a few percentage points, or SPY has a hiccup tomorrow and opens a bit lower, hopefully JPM will come back under my short strike and help out my total PNL. What I can do to help myself a little bit is I can roll up these short strikes a little bit. So right now you can see my puts are like almost zero. They're at 2 delta, 3 delta. They're completely useless at this point. So what I'm going to do is I'm going to close this out and I'm going to open it back up at the 20 delta, keeping the exact same $5 risk as you can see here, 145 to 140. I'm moving it to the 160, 155. I want to collect $48 in credit. There's a lot of people in here, tight markets. I should be able to fill this. Oh, and there's already a position, an automatic. There's already a GTC order, of course, that I set up when I opened up the Iron Condor. So let's try that again. Okay, now I should be able to do it. 48 credit, and we'll give that a minute or two. So why am I doing this? Normally I would be closing it, but because my portfolio is highly positive, I want to keep that negative position on there. The other reason is the RSI is very high. It is a bit of a prolonged up move, so I'm hoping for a bit of a pullback, and I don't need a lot of pullback here, right? I'm just at the break-even point right now, so I need this to come back a little bit. So I just want to collect a little bit more. Okay, now it's 40. Okay, let's see if I can bring it down to $47. Maybe that will help fill it. And there it is. We got filled, so I collected $47 more on there. I still have, if you look here, a 160 to... There it is. I still have a 160 to 165, a short landing. So if there's a bit of a pullback, there's still a position here where I can quickly hope or quicker collect some extrinsic value here. I tend to avoid turning this into a butterfly. If I were to turn this into a 165 butterfly, I could do that, but then at that point, it would be really slow for the extrinsic value to come out, and I would have to hold it for another 17 days. What I'm hoping for here is that JPM turns around, and in the next 3, 4, maybe 5 days, I can sell this for a scratch, right? If I want to close it out today, I would have to pay right now $274, right? Which I would record a $145 loss. Not big on it. I want JPM to turn around a little bit, just pull back, and I'm hoping that it can do that in the next few days. But those are the kind of thoughts that I have when it comes to trying to keep a delta neutral portfolio. Again, IPOD, again, it's showing minus 12, but I'm not sure if I believe that. I think that's the same story as IPOE. As soon as that merges and changes the symbol, that is going to change radically. And IPOD tends to fluctuate with the SPY as well. I find it that's a number to me that seems a little bit out of whack, just because there isn't that much history, mathematically speaking, on IPOD. All right, so that's it in a nutshell on thoughts on how to manage positions and having that delta neutral portfolio in the back of my mind. And then very quickly, I'm going to do a quick video. The next one is going to be on SoFi and Square and how these two highly directional positions are wreaking havoc on my daily P&L. All right, that's the next episode. Thanks.